we're staring down the barrel of a mega-cap earnings avalanche, with over $7.49 billion in market cap on the line. This week will be all about the numbers and one moment in particular that decides the week. Can the giants deliver? The stakes are high, with some of the world's most valuable companies set to spill their guts. Will they justify their lofty valuations, or will we see a correction? One thing's for sure, the next 5 days will be a wild ride. Monday morning, before the open, it all kicks off. The question on everyone's mind, will the first report of the week set the tone for a triumphant rally or a dismal decline? Welcome back to the week ahead, where geopolitics is once again hijacking the narrative. The Middle East, in particular, is a hot mess, and that's putting it mildly. Netanyahu's dismissal of Trump's Gaza plan as unacceptable sets the tone for a potentially explosive week. But let's not get ahead of ourselves. The real question on everyone's mind is, can we finally get some clarity on the Strait of Hormuz situation? Iran's been dangling the Oman deal like a carrot, but with conditions. The U.S. needs to make the first move, or so they claim. And what's the U.S. response? According to Trump, they're low-keying it, a strategy that's either genius or reckless, depending on who you ask. The economic pain, however, is very real. The uncertainty's already taken a toll on Gulf forces, with most of them ending the week subdued, awaiting that elusive deal clarity. But here's the thing, it's not just about the Hormuz. Russia and Syria just inked a deal on the future of those contentious bases, Tartus and Mymimim, after 18 long months of negotiations. And then there's Yemen, where the Houthis just attacked a Saudi refinery because why not? It's not all doom and gloom, though. The passage of ships to the Black Sea continues, uninterrupted, according to Turkish officials. So, what does it all mean? Well, for starters, it means the market's in for a wild ride. The big question hanging over us this week is, can diplomacy somehow, miraculously prevail? Or are we staring down the barrel of an escalating conflict that could send shockwaves through the global economy? The stakes are high, $7.49 billion in oil exports are at risk, and that's just the tip of the iceberg. It's a delicate balancing act, and we're all just waiting to see who'll make the next move. So, buckle up, folks, it's going to be a bumpy week. Monday kicks off with a trio of earnings reports that could set the tone for the week. Kaspi.kz, the financial services powerhouse, reports before the open, and the big question is whether they can live up to those lofty estimates. We're talking $1.19 billion in revenue and a staggering $1,391.92 in earnings per share. Can they keep their momentum going, or will they leave investors wanting? One thing to watch, how their revenue growth stacks up against the estimated $1.19 billion. Then, we have Ferguson Enterprises Inc., another pre-market reporter, with a more modest but still impressive estimated $8.8 billion in revenue and $3.35 earnings per share. The key here is whether they can maintain their profit margins in a competitive landscape. After the close, JBS NV takes the stage, with a relatively modest $23.1 billion in estimated revenue and 32 cents earnings per share. For JBS, it's all about navigating the challenges in the food products sector. Can they keep costs under control and still deliver? The one thing to watch here is their ability to balance pricing power with input costs, all while trying to eke out that estimated 32 cents per share. Tuesday's earnings are all about proving the pessimists wrong. Cardinal Health Inc. kicks things off before the open, with a whopping $65.7 billion in revenue on the line. Can they finally put their supply chain woes behind them? One thing to watch, will they squeeze out that estimated $2.44 in earnings per share? Later, Supermicro Computer Inc. takes the stage after the close, with a respectable $11.8 billion in revenue expected, though the real test is whether they can hit that 98 cents EPS target. What's the magic number that'll make or break their stock? Meanwhile, Tencent Music Entertainment Group and CLTD are both reporting before the open, with $8.8 billion and $7.3 billion in revenue up for grabs, respectively. For Tencent, the question is whether their music streaming dominance can translate to a sturdy $1.62 in earnings per share. And CLTD? They need to show that e-commerce momentum, but an 80-cent EPS would be a sweet consolation prize. Can they make it happen? As these companies take their turns in the spotlight, keep an eye on how they balance growth with profitability. It's not just about meeting estimates, it's about exceeding them. Wednesday's earnings are shaping up to be a retail showdown, with Vipshop Holdings Ltd kicking things off before the open. Can they live up to that estimated $25.4 billion in revenue and $3.96 in earnings per share? One thing to watch: how their discount-heavy model is impacting profit margins. Later, Performance Food Group Co. will report, also before the open, with a more modest $18.4 billion in revenue and $1.63 in earnings per share on the table. The question is, can they keep their food distribution business well-stocked for growth? After the close, all eyes will be on BBB Foods Inc., with a whopping $25.4 billion in revenue estimated, but a dismal minus $3.67 in earnings per share. What's behind this staggering loss, and can they turn it around? And in a completely different arena, Cisco Systems Inc. will report after the close, with $17.2 billion in revenue and $1.19 in earnings per share expected. The big story here is how they're navigating the shift to cloud-based communications. As these companies take the stage, one key theme emerges: who's got the right strategy to drive growth in a changing landscape? For Vipshop, it's all about balancing discounts with profits, while for Performance Food Group, it's about keeping their distribution channels humming, and for BBB Foods, it's about stopping the bleeding, and for Cisco, it's about embracing the cloud. What will we learn from these reports? Earnings season is in full swing, and Thursday brings us a crucial report from Applied Materials Inc. Can the semiconductor giant live up to its reputation, or will it succumb to the industry's woes? With estimated revenue of around $9.2 billion and earnings per share of about $3.46, the stakes are high. One thing to watch: how Applied Materials navigates the delicate balance between demand and supply chain disruptions. Will they be able to maintain their profit margins? As the company reports after the close, we'll be keeping an eye on their ability to adapt to the ever-changing semiconductor landscape. Will they be able to exceed expectations, or will they fall short? The $9.2 billion revenue estimate looms large, and meeting that number will be key to investor confidence. Meanwhile, the estimated $3.46 earnings per share is a significant target to hit. As we wait for the report, one thing is certain: the market will be watching closely. And with the report coming after the close, we can expect a lively after-hours session. So, what's the verdict? Will Applied Materials deliver, or will it disappoint? This week, we're in for a real treat: a smorgasbord of earnings reports from the likes of Kaspi.kz, Cardinal Health Inc., and Vipshop Holdings Ltd., to name a few. But what does it all mean? On one hand, the bull case is that these companies will blow the roof off with their numbers, sending their stock soaring. I mean, who doesn't love a good underdog story? Take JBS Envy, for instance. They're expected to impress with their latest figures. But let's not get ahead of ourselves. The bear case is that these reports will be a snooze fest, with companies like BBB Foods Inc. and Performance Food Group Co. serving up nothing but bland, uninspired numbers. And then, of course, there's the tech sector. Will Cisco Systems Inc. and Supermicro Computer Inc. live up to the hype, or will they disappoint? Applied Materials Inc. is another one to watch. Their report could be a real game changer. But let's not forget the dark horses. Tencent Music Entertainment Group, Ferguson Enterprises Inc. and CLTD are all reporting this week, and they could throw a wrench into the works. The real risk this week is that these reports will be a mixed bag, leaving investors scrambling to make sense of it all. So, what's the takeaway? It's simple. This week is all about managing expectations. Don't get too caught up in the hype, and don't be afraid to take a step back and reassess. After all, as the old adage goes, pride comes before a fall. So, buckle up, folks, it's going to be a wild ride. And remember, the only constant is change, so stay nimble and stay informed. The stakes are high, but the potential rewards are higher. It's time to put your money where your mouth is, or not. The choice is yours. With earnings reports coming in from all directions, it's a challenging task to navigate the landscape. But one thing's for sure, this week will be a real test of mettle for these companies, and for investors alike. So, what's the main event this week? It all comes down to one moment: Kaspi.kz's earnings on Monday before the open. This Kazakh fintech giant is set to reveal its numbers, and the stakes are high. With a market cap of around $7.49 billion, all eyes will be on its performance. Why does it matter? Because Kaspi.kz's success is closely tied to the region's economic health, and its earnings will give us a glimpse into the state of Central Asia's financial landscape. And that's a wrap for this week's preview. Keep an eye on Kaspi.kz, Cardinal Health Inc., and Cisco Systems Inc., all with major stakes. This is not financial advice. We're just cutting through the noise. Want more? Subscribe for our daily shorts, and let's get ready to dive in.